In a release today from the Mortgage Bankers Association, mortgage demand rose 18% as interest rate hit another record low. In the 1986 classic, The Money Pit, stars Tom Hanks and Shelley Long teach us that a good price is not always a good deal. What are the keys for investors or personal home buyers to investigate before making a decision during a global pandemic? The Louisiana Purchase from France in 1803 may be the greatest real estate deal of all time. For $15 million, the U.S. got 13 territories for less than 3 cents an acre. Let that number sink in. Where should we be looking for the greatest investment of our lifetime? And what happens when we can't pay our mortgage during a global pandemic? Today, our panel of experts will sort out the market. Is it time to build? Is it time to buy? Is it time to sell? Or is it time to invest? Up first, an important briefing from Andy Meisner, Oakland County Treasurer. Next, we'll hear from our powerhouse roundtable, Emil Izrailov of Lake Michigan Credit Union, Renee Lossia of Renee Lossia Acho Real Estate Group, and Randy Wertheimer of Hunter Pasteur Homes for their perspectives on the market. You heard the joke, a builder, broker, and banker walked into a bar. That's all coming up next. If you'd like to add a question to the chat box, please do so, and I'll do my very best to incorporate it. It's Wednesday, June 3rd, 2020. I'm Derek Dickow, and this is Impact. This series is free to you thanks to the generosity of our sponsors, and Impact on Residential Real Estate is proudly presented by Signal Restoration Services, a company dedicated to helping you restore your business or property anywhere in North America. Contact Signal today for their relentless customer service 24 hours a day, 7 days a week, 365 days a year. And as we continue to navigate to a new normal through this pandemic, Signal is proudly offering COVID fogging, cleaning, and sanitizing services for your business or home. And as we do every week at the start of our show, for those of you that have been impacted by COVID-19, either by losing a family or friend, our thoughts and prayers are with you. We've partnered with the Children's Foundation COVID-19 Emergency Fund to help support their efforts for frontline and essential workers. We'd like to encourage you to make a financial contribution if you're in the position to by texting 2020 IMPACT to 76278. That's 2020 IMPACT to 76278. Please help us make a difference while making impact. Our first guest is the treasurer of Oakland County. Oakland County has been working hard. Oakland County Treasurer's Office, been working hard to ensure all resources are available, how you can access them, and to residents of Oakland County. He's got an enormous experience of more than 25 years of dedicated service to the community, to our state of Michigan, and certainly the last 10 years to the Oakland County's office, where he served as a treasurer since 2008. He's focused on preserving the county's prosperity during times of unprecedented financial hardships, preventing mortgage and tax foreclosures, and destabilize our communities that threaten property values, and on prudent stewardship and investment of Oakland County taxpayer dollars. He's been an advocate for small business and for residents throughout our state. It's my honor to welcome this morning Andy Meisner, Oakland County Treasurer. Good morning, Andy.
Good morning, Derek. Thanks so much for having me.
It's great to see you virtually and look forward to seeing you in person soon. Can you give us a snapshot of where we're at from your perspective from the Oakland County Treasurer's Office?
Sure. Well, obviously COVID-19 is at the forefront of everybody's attention. And I think that there's some good news. The initial push was to try to level the curve, as it were. And I think that we've had some success doing that. Obviously, it's come at a great cost to our economy, but there are positive things coming. We heard from Lansing that we're going to see a continued reopening of the economy, ensuring that it happens safely. But I'm encouraged that I think a number of the indicators that I look at as county treasurer are quite strong, and that there are a lot of resources that have been made available through our office and the county treasurer's office for both families and small businesses, as well as a pretty significant response from the federal government. And so, we're not making what we made, 6 months ago on investments. But the point is that our principal is protected and our fundamentals remain strong. We've been through a crisis before. We're going to get through this one. We just got to be smart about how we do it.
Appreciate that. Andy, there was a report by the Detroit News recently about the upcoming crisis and lack of affordable housing throughout the state of Michigan. How does COVID-19 affect foreclosure rates throughout the county?
Yeah, well, that's a great question, Derek. And I think that COVID-19 has the potential to cause a whole other wave of mortgage foreclosures. Now, with regard to tax foreclosure, I was the first in the state to suspend the tax foreclosure process for the entire year. And one of the lessons that we learned from the Great Recession and the mortgage foreclosure crisis of 10 years ago is that the best way to deal with a foreclosure is to prevent it. And so I think if we learn the lessons that we learned from 10 years ago and we work aggressively with families on how to navigate working with their mortgage lender, and if we remind the mortgage lenders and the banks about what it felt like 10 years ago to have this huge inventory of REO that they didn't really know what to do with, and that all of that had such a negative effect on not only our property values, but our taxable values, then perhaps the damage from what would be a whole nother wave could be mitigated. Right now we have a little bit of an artificial safety net because there is a ban on foreclosures and evictions. But we're going to have to be very careful as we get into the territory beyond that to avoid another wave, which we simply cannot afford.
Appreciate your leadership on the tax forgiveness or the foreclosure process. How does that affect the housing market specifically here in Oakland County? Do you think it helps it positively or negatively?
Yeah, well, again, that's another good question. And again, going back to the foreclosure crisis of 10 years ago, we have a lot of empirical data that we learned about the impact of foreclosures on property values. There was an MIT study that was done that documented that it's not that the property that's foreclosed experiences at least a 25% in reduction in its value. But what we were affected by was not only that, but the study documented that neighboring properties also suffer from a drop in property values when there's a foreclosure in the neighborhood. And so it goes back to that ounce of prevention. And that by letting everybody that has been facing property tax delinquencies, who would have otherwise potentially been tax foreclosed on March 31st, by giving them some breathing room until March 31st of next year, my hope is that we'll not only prevent the couple thousand tax foreclosures that we might have looked at, any number of tens of thousands of folks that are out there with a mortgage who are going to have difficulty paying it, but that if we can prevent the foreclosure, we can prevent the corresponding negative ripple on property values and taxable values. We'll still likely see a hit, but I do think we know enough about it, and I am trying to spearhead a plan to limit those foreclosures, and it's starting with the county treasurer's office.
Andy, let's leverage your experience in the State House, serving in the legislature for 3 consecutive terms. What recommendation would you have to the legislature in office today about stop overtaxing people's homes?
Yeah, so again, that's a really salient question. And I did serve in the House for 6 years and served on the Tax Policy Committee. Derek, this is a situation where I think that local governments need to take the long view. In the last foreclosure crisis, we saw an unwillingness in a lot of places to have assessments go down with what we saw was happening in the market. And there was this resistance, this desire for the governments to hold on to what revenues that they could. And I get that, but it doesn't show great foresight. And what we learned was that strategy didn't work out. We saw this whole wave of foreclosures. So one of the things that I am working with legislators in Lansing on right now is to not only give treasurers like me the ability to waive interest and fee, to lighten the load for the folks that have delinquencies. But another conversation that I'm having is about the possibility of reopening this year's assessments and doing it in a way where hardships from COVID in 2020 could be used to get an adjustment in property taxes for the 2020 tax year. Under the current law, there's a 1-year lag. So if we opened up somebody went into the board of review in July on a commercial industrial, they're generally going to have to talk about what was happening last year. And while we might forego some short-term revenue, I think that the long-term benefit is going to be great and will allow us to avoid a huge cratering of taxable values and the property values that define those.
I've got a question from John from the city of Berkeley. If people are going to lose their homes from COVID because of financial hardships and the crisis, what happens to the tax rolls in Oakland County?
Well, John, thanks for the question. And to be clear, we are working desperately to make sure that nobody loses their home from foreclosure. That is my goal, 0. Now, we've achieved our goal for this year because I pulled the plug on the entire tax foreclosure process, as long as it's not a commercial property that poses a threat to the public health and safety. So there will be no tax foreclosures in Oakland County this year. Now, to the extent if there's mortgage foreclosures, and again, a tax foreclosure is where you don't pay your property taxes and it gets kicked over to the county treasurer. But in the case of mortgage foreclosures, I am using my position to talk to the bank presidents and the mortgage lenders and saying, we don't want any losses of homes because it's going to boomerang. It's going to cost a long-term detriment to the value of the property that the bank would be taking over and to the overall property values. And so if in some case a property is lost to foreclosure, John, we know that it's going to hurt our property values. Oakland County lost $14 billion in our taxable value from the foreclosure crisis 10 years ago. That is something that we cannot afford, in addition to cuts from the state level that we're expecting.
Andy, you've been a tireless advocate on behalf of small business. I think that's something I've admired from your elected leadership positions over the years. What have you been doing to help small business owners during the crisis?
Yeah. Well, being treasurer for 10 years has given me a real helpful education in moving at the speed of business and really understanding the cycles and challenges of being a small business. I've served on the executive board of the Oakland County Business Finance Corporation that's made hundreds of millions of dollars of loans. And so that really helped inform my plan for how to help small businesses right now going through the crisis. And so our strategy has focused on providing one-on-one counseling and assistance to small businesses in a couple of different categories. One is that when the executive orders shut things down, the revenues went down to 0. And so our counselors that we offer through our Financial Empowerment Center and our entrepreneurial boot camp that we offer through the treasurer's office, the first thing that we did was to work with small businesses on rebalancing their budgets with 0 or less revenue coming in. At the same time, we helped dozens and dozens, if not more, Oakland County small businesses, especially women and minority-owned businesses, to apply for some of the various grant programs that have been made available. We got some money in Oakland County from the MEDC. we put a little bit more money in. And so the grants that are available, we help them apply. We have some small businesses that do a great job, but maybe are not quite as strong with the paperwork. And so we worked with them hand in hand to get through those applications. And then lastly, there are any number of loan programs that have been made available. Certainly the PPP or Paycheck Protection Program has been one of the higher profile ones. And so we've worked diligently to make sure that those dollars get to the right place and that they get to Main Street instead of Wall Street and get to some of the small businesses in Oakland County who really need that funding and who really were the intended targets. So those are a few of the ways that we've worked to assist small business. And we're open for business right now. People can call 421-ANDY. We'd love to work with you to help your business not only get through this, but to pivot for a successful future. Any disruption in the market presents opportunity for entrepreneurs. And so we want to make sure that Oakland County businesses that are currently in existence or those aspiring entrepreneurs have the opportunity to take advantage of that because I still believe that small business is the engine that makes the Oakland County economy go, and that we need to double down on our investment in that sector.
Just to reiterate that number, it's 248-421-ANDY. I think I've known that number now for 15 years. You've been very helpful. Let's take it more to a granular level. We talked about small business. What are you doing to advocate for families in Oakland County?
Yeah, well, all the small businesses are run by families, and so that's where you really do have to start. And coming out of the foreclosure crisis 10 years ago, we started this thing called the Financial Empowerment Center. And the idea was to provide one-on-one counseling. If you're a family out there and you're getting nasty grants from your mortgage lender, it's scary. And you might be worried about engaging with that lender on your own. And so what we did and what we're continuing to do now is to have a counselor available for families to talk about housing. Where are you at on your mortgage? Have you missed any payments? Here is how we can together proactively engage your mortgage lender to get out in front of it. That addresses the mortgage piece for families because our number one goal after keeping people healthy is to keep a roof over their head. The mortgage piece, I talked about the property tax foreclosure piece. We took that off the table. We eliminated virtually every property tax foreclosure in Oakland County to say, hey, if you're on a payment plan, do what you can to keep paying. If you can make your payments, that's great. But if not, we're going to really need you to focus on your health. And lastly, just to say that we are going to help you protect your credit score as well.
Yeah, that's important, and I appreciate your leadership. I appreciate your leadership on all that. I do want to ask, in addition to being our treasurer, you're obviously running for Oakland County executive. What do you think, from your perspective, what should the county do to protect its financial future?
Well, I think it's keeping families in their homes. I think it's keeping people safe. And I think it's having a plan to build on our strengths going forward so that we don't miss a beat. Oakland County is an extraordinary place. And by working together and building towards the future, that's how we're going to be successful.
And I know you've been sheltering at home for the last couple months. I'm sure you're anxious to get out in the streets and out to see the community. Do you have any big plans for the summer otherwise?
Well, my summer's pretty much keeping the treasurer's office running and spending a little time on the campaign trail.
Very good. Well, if you don't mind, we have a banker, a builder, and a broker on the panel. Maybe you just hang out with us and offer some insights in between. Why don't you stick around for a few minutes? I think we'll enjoy that. So for now, thank you. I want to thank you again, Andy Meisner, our Oakland County Treasurer, for being a part in giving us this briefing. We're going to take a quick break. I do want to remind you, if you're in position to help us out with the Children's Foundation, their COVID-19 Emergency Relief Fund, by texting 2020 IMPACT to 76278, and we'll be right back on Impact.
Hi, I'm Larry Burns, President and CEO of the Children's Foundation. In these unique and challenging times of the ongoing coronavirus, our mission to improve the health and wellness of children and families has become even more important. To keep communities safe and healthy, we have established a COVID-19 Emergency Relief Fund, allowing us to offer immediate support to community organizations who are now providing food, learning kits for homeschooling, virtual mental health services, and more. With your help, we can reach more children and more families. I invite you to consider making a gift today. It will directly impact some of the most vulnerable communities in need. And to learn more about the work supported by the COVID-19 Emergency Relief Fund, or to donate, please visit www.yourchildrensfoundation.org. Thank you for your continued support. We are in this together. Onward.
As AT&T's #1 partner, MMS prides itself on delivering a world-class experience to our clients and our communities to keep them connected where they live, work, and play. During these challenging times, we are here to serve you. We have many options to keep you connected to your loved ones by offering non-contact transactions and curbside service. Also, because we care about our healthcare professionals, we are offering 3 months of free service to doctors and nurses. Visit mmsmobile.com/stores to find an open location near you and call ahead to set up a curbside appointment.
Welcome back to our powerhouse panel of experts. In her 15 years of being a real estate agent, she's generated more than $600 million in sales in Michigan. In 2017, she was the first woman nominated the Chaldean American Chamber of Commerce Business Person of the Year Award. She brought the Keller Williams luxury brand, which now consists of more than 250 agents here to Metro Detroit area. It's also her 29th birthday. Ladies and gentlemen, it's an honor to welcome Renee Lossia Acho to the program. Renee, good morning or good afternoon.
Good morning. Thanks for having me, Derek.
Thank you. He's been a mortgage banker since 1996 and a member of the prestigious President's Club for the last 6 consecutive years. He's an active member of the Home Builder Association of Southeast Michigan and Michigan Mortgage Lenders Association. It's my honor to welcome our banker, Emil Izrailov. Let's say hello to Emil.
Hey, good afternoon, everybody.
And finally, he's one of the founding partners and current CEO and president of Hunter Pasteur Homes, a developer and home builder. With them, he's successfully developed more than 20 communities and built more than 1,200 homes and condominiums throughout Southeast Michigan. He's also a longstanding board member of ORT locally and nationally. Let's welcome to the program our builder, Mr. Randy Wertheimer. Randy, good morning.
Derek, how are you?
And we've got Andy Meisner, our Oakland County treasurer, is going to offer us some insights as we go along with the program. Randy, I'll start with you. The wonderful Zig Ziglar famously said, you don't build a business, you build people, and people build the business. Your team builds homes. How has COVID-19 affected your industry?
It's had a tremendous effect. Aside from being closed for almost 2 months, we were excited to get back to work on May 7th per the governor's order. But coming back to work was very different. Our sales centers where our model homes are located, we're only allowed to have one customer at a time, and that's by appointment only. Our construction staff and our trades have gone all in on the PPE equipment and are taking that very seriously. Nobody is allowed inside any unit without gloves, masks, and the cleaning protocol has definitely been stepped up to a different level. So I think we're working in a new normal right now. We're probably working at about 80% capacity since we reopened on May 7th. But the key to our success, as you mentioned, is our team members. We have a tremendous construction team, sales team, our office and administrative team are all outstanding and take this very seriously.
Your team has played an important role in rebuilding parts of Detroit. I'd love for you to give us an update on the Brush Park development.
Sure. We are co-developing City Modern with Bedrock. There's over 400 units. About 300 of those are rentals, 116 are for sale. We have delivered over 40 of the for sale units to date, with another 40 or so to deliver between now and the end of the year. The rental product, they've delivered about 50% of the rentals, with the other 50 delivering in the next 18 months. We feel like this is the first time in our lifetime that there's been a development of 400 plus residential units in downtown Detroit in one development. Our sale prices we're excited about, the rental rates we're excited about. And Brush Park is located right in between the Central Business District and Midtown, and walkable to all 4 pro sports teams. And if anybody's looking to live, work, and play in the Detroit area, this is the place to live.
We actually just posted a few of the slides from the development. It looks fantastic, and good luck as you continue that. You're also a residential home builder, luxury homes throughout Oakland County and Metro Detroit area. You've got a project called Barron Estates at Long Lake between Middle Belt and Franklin. I think we have a couple photos that we'll include now of Barron Estates. Can you give us an update on that development and what it's like to build luxury homes during a global pandemic?
Yeah, so what's interesting is our products all over Southeast Michigan are dependent on the market. And so Bloomfield Hills on Long Lake is, as you mentioned, a luxury home community. We only have 22 home sites. 16 of the 22 are sold. We're probably about 50% of the way built out in the community. And the interesting thing about the coronavirus, what I've seen in the last 30 days, or even the last 3 weeks since we opened back up, the high-end part of the market is less impacted, I believe, than the low end. We've had a lot of activity at Barron Estates. These homes sell for between $1.5 and $2.5 million. And so that's extremely high end. But with interest rates at 3%, which I'm sure Emil will speak to, we've seen a tremendous amount of activity in the last 3 weeks, even downtown at City Modern or in other developments. The higher end of the market, whether they're lawyers, doctors, business owners, executives, they're probably in a safer position financially. And we're excited that we have product to sell at that high end price point.
Most of those people that you just mentioned are clients of Renee's. Renee, President Franklin D. Roosevelt once famously said, real estate cannot be lost or stolen, nor can it be carried away. Purchased with common sense, paid for in full, and managed with reasonable care. It is about the safest investment in the world. Renee, you're the top real estate agent in our state. Help us synthesize what's happening to the marketplace.
Well, it certainly has been a wild ride, of course, in every industry. Real estate is no exception to that. What's interesting is that, of course, it's very different than 2008, 9, and I think that a lot of the anticipation is what people expected to have some of that the similarities and parallels in terms of what we're seeing now. The fundamental difference has been that we are coming off of really a 12-year ride of an uptick in values across the board for the economy. And that has certainly been the truth for real estate values. So we expected to some degree, if you look at your historical data, you'll see that after 10 years, you typically can anticipate a correction. So this year, prior to COVID, there was some talk of pull back a little bit on values, modest, of course, compared to what we'd seen in 2008 and 9. But we had anticipated this. The difficulty was that there is an inventory shortage, and that has stabilized the real estate market well beyond even now the impact that we're seeing after COVID. So like everything, there's a supply and demand, and going into the reason that we still had the increase in values for as long as we had, for now going on to 12 years, is because the inventory levels are just not there, and they're across the board shortage. So from the $200,000 all the way to the $3 million homes, you don't have quite the selection. So it's a simple supply and demand result. What was interesting to watch, and what a lot of people couldn't anticipate the reality of being, now that we have lifted the stay at home and real estate could become an essential business, which was not until really early May that we were allowed to actually effectively go into the market and see the results of the holdback, is that there was a pent up demand. So the shift had been, for those 60 days that we were on hold, with interest rates being as low as they were and still are and will continue to be, people have opportunity that they didn't think was perhaps available to them, both in refinancing their own home and perhaps changing and shifting from becoming a buyer to just refinancing, or a seller to staying in their own home and just reinvesting in their property. And that again will shrink inventory. So we continue to have a shortage of opportunity in the market, and that levels the values. And as that stabilizes where the numbers are, that still creates the pent up demand. So when the doors opened literally in early May, we saw what was talked about in terms of being a pent up demand becoming a reality. And some of us were on the fence, not exactly certain whether or not that was going to be accurate and if it was just hopeful or wishful thinking. And I can tell you, somewhat like what Renee just said, we have seen really almost an incredible interest in demand. We knew what the supply was, and some of that supply continued to fall off where people wanted to watch and wait what was going to happen post COVID. The demand was there, and it's very, very real. So in the last 30 days, and we haven't gotten all of our statistics back yet from National Association of Realtors, but we have seen locally a huge demand, and we are seeing sales very quickly and aggressively in all price points, going from, again, in certain areas of Oakland County, from 200,000 all the way to 2 million. So it is consistent demand. It is probably a lot of the people who were waiting and had hoped to buy in March and April and weren't able to. So we have those clientele, and then we have additional clients who now, after COVID and staying in their home for as long as they have realized that they want to shift their lifestyle. And we've seen a comeback to the house, a comeback to parts of homes that maybe were considered to be less important, people who are anticipating how life is going to be in the new normal. And lifestyles, whether or not we open our doors and everyone goes back to restaurants and the gyms, there's going to be certainly, hopefully, several people, the majority of us, who are very comfortable doing that. But people are anticipating another opportunity or a situation where maybe we have to go back into our homes, and they want to have that option. So learning how technology has changed all of our lives and the ability for us to work from home has now shifted the value of your house and how you use it. The home office, the home gym, the backyard areas where you can entertain, the dining room, have all become very important, and have now shifted a little bit of demand either in reevaluating the use in your own home and doing renovations, or going out and buying. But there's no doubt that there's absolutely a significant demand on the market in all price points. And there was certainly a pent up group of people looking to buy, and we're seeing it firsthand.
You know, Renee, so often we continue to hear this, the new normal. How does it affect every industry? So what you're saying is most people are going to use their home in certain ways to work from home, to work out from home. So how is that affected from the buyer's perspective? I mean, are they now saying to you, we must have an office to work out from home, or we must have a facility to work out in the basement? Is that becoming more of a priority than, say, other amenities that typically in the past have been priorities?
It has been. We're talking to people about that very often. And I don't know if it's a must have, but they want the option. People, if God forbid this happens again, we've talked and heard about possibly another wave of the coronavirus in the fall. Whether or not that happens, and we'll certainly all pray that it doesn't, people like the option. What we're hearing over and over again is that there's a shift in every industry. And a lot of industries who had been heavily used transportation or had to go into an office, we're realizing now that we might not have to as much as we thought. And as a result of that, the options to use your home for the things that you had to leave your home for, a lot of people want to have that available. So it's not even about having a bigger home necessarily. It's about having different spaces within the home. And I talk a lot with clientele, and I do a lot of consulting both with builders and with my clients. There's some instances where it might not be better to buy. It might be better just to reevaluate the space in your home and redesign what you have and use that to your advantage. But there certainly is a desire to have that option available if and when the need comes. And I think people are looking at the new normal being a balance between home and office, or home and play, or restaurant and dining in with your family and friends. So all of this is being looked at and evaluated in terms of how people prioritize the space in their house. And so, yes, we are seeing that.
Emil, we spoke to our builder, we spoke to our broker, we got to talk to the banker. Help us understand what forbearance looks like from your perspective, and how will that affect the borrower's ability to buy their next home?
So forbearance has really changed our industry in the last couple of months. When, the definition of forbearance is to be able to defer payments for a set period of time. Fannie Mae and Freddie Mac came out very proactive this time versus in 2008. And they, basically allowed people to skip mortgage payments without affecting their credit in a negative way and without having to prove a hardship. And part of the reason for that was just lenders were not equipped to start handling so many hardship packages. So Fannie Mae and Freddie Mac said, hey, you can defer up to 12 months, 3 months at a time, and we will revisit this every 3 months and allow you to either get caught up once the 3 months pass, or modify your mortgage and add it on to the back end. Now they, the ability, and everybody at the beginning didn't know how that was going to affect somebody's ability to buy or refinance down the road. And Fannie Mae and Freddie Mac, and as well as FHA and VA, have come out with guidance and explained that, if you had to take advantage of the forbearance offering, after you pay back your forbearance or modify your mortgage and make 3 successful payments, that you would be eligible again for a refinance or a new purchase. The previous forbearance guidelines required a 12-month waiting period after forbearance. So that's a huge step. And I think those are some of the things that are going to help sustain market values, like Renee mentioned. The market's still moving. There's very little inventory, which again is going to keep demand high and prices stable. But that's also going to prevent us from, going backwards like we did in 2008.
Can you help us understand the major difference between a credit union, a banker, in a traditional, a mortgage banker, and a traditional bank?
Absolutely. So there's 3 types of mortgage providers, right? So you have your big banks. The large banks are generally publicly traded. They offer mortgages as a customer, service because they have to, right? So you've heard a lot of them cut back on guidelines, larger down payments, higher credit score requirements. And they had to do that because they're publicly traded, their shareholders are expecting some type of action to be taken. So, they made those cuts. Brokers and mortgage banks, a lot of those in Michigan. Michigan is a very competitive mortgage landscape, and they all do a great job, but their challenge is that they have to sell other investors' products. So when recently the jumbo market just didn't exist for brokers and mortgage bankers because they lost liquidity for jumbo loans. That affected their business model, and they weren't able to sell jumbo loans. FHA had some restrictions where you saw higher credit scores as being required for FHA, which are FHA is typically FHA is a great tool for people with lower incomes and slightly bruised credit, where it's an easier lending guideline than conventional loans. And FHA, one of the great things about FHA is FHA rates aren't affected by credit scores like conventional guidelines. But in the last few months, last couple months since COVID, that's been a challenge there for these mortgage banks and brokers. So they don't control what can be offered, including their pricing. Portfolio lenders like LMCU, we set the prices because we lend our own money. At the beginning of COVID, we set aside 1.2 billion with a B in cash to allocate it for jumbo lending and FHA and VA and conventional guidelines. And none of our guidelines changed. We didn't raise any required credit scores. We didn't require any additional down payments. We kept everything as is because we know that this is a temporary situation. And even though it's unprecedented, and, we've never seen anything like this in history, we feel that it's going to recover and this is temporary. And our motto is, we don't leave any members behind. But since that one point, since the beginning of the this COVID challenge, our member deposits have increased so much that we now set aside 1.6 billion for that for the jumbo and saleable guidelines. So, borrowers aren't affected. We're doing business as usual. We don't need warehouse lines because we lend our own cash, and that's really kept us very busy. We've seen some interruption on our builders because of the stay-at-home order, but now everybody's back in action, and our builder partners, our real estate partners, they're coming in with purchase agreements every day, and we hope business as usual we see business as usual for a very long time coming.
I want to position this next question to Randy and also get Renee's insights. I'll start with Randy first. Randy, the crash of '08 left tens of thousands of people with local evictions and foreclosures. Some of the residential values were cut in half or more. It was also a fantastic opportunity for investors to come in and be able to take advantage of that on the upside. So what advice do you have for people speculating today?
I think the biggest difference between today and 2008 are the financial condition of the homeowners. And what I mean by that specifically is in 2006, 7, and 8, there were programs in which people were buying homes with no money down. Well, that's not a home buyer, that's a renter. And so the foreclosure crisis was because of some irresponsible lending practices. And I think that really got cleaned up in 2008 and 2009. And you're seeing today people with significant equity in their houses, and they're less likely to have an issue of giving their house away if they have 15, 20, 30% equity built up into their home between the values rising, as Renee had mentioned, along with people putting down 10 and 20 and 30%. You're less likely to see a foreclosure epidemic because people are invested in their home. And, to me, that's the single biggest difference. Aside from the fact that this downturn really wasn't caused by an economic driver, where in '08 and '09, the downturn was driven by economic drivers. This is driven by an unforeseen, illness that came out of nowhere, that caught the whole world by storm. So I think between the economic drivers being good going into this and the fact that people have equity in their homes and the mortgage business really changed its lending practices after what happened in '08 and '09.
Renee, same question.
Yeah, absolutely accurate. And that's really the fundamental issue. We were led into 2008 by exactly irresponsible practices and really a fundamental system that was about to collapse. And it did. And we were left holding the bag as a country and a nation. But the reality is, when people, exactly what Randy said, when we can go to closings in 2006 and 2005, and you have no docs loans, and you have people who are literally, we had buyers getting money back at the table. There was no vested interest. So walking away from your home at that point wasn't walking away from your own sweat equity or your own personal financial equity. So it became easier to walk away from that burden. At this point in the stage that we've had, for now going into 12 years, that's no longer the case. And thank goodness we did rectify that. And we have the stabilization of the industry, the economic industries now that are not weakened. We are weakened by a health crisis. We aren't weakened because of the economic crisis. Now, obviously, the health crisis is impacting the economy. But another difference is that the packages, that the stimulus that we are being provided, the forbearance, the deferred loan programs, the deferred lending, this is all, again, stabilizing what was in 2008 an issue. So we have seen that our federal government is actually putting the money in to stabilize prior to seeing this and creating the necessity to avoid, hopefully as much as we can, the impact of the economic fundamentals from the health crisis into the housing market. I can tell you, I don't have any doubt saying that I think we're going to see way fewer, of course, foreclosures than we did going back 10 years. And I think we're even going to see minimal impact because of the continued opportunities and packages and guidelines that are being brought to the table for people in this situation. And again, with interest rates being as low as they are, the opportunity to refinance, the opportunity to have some of that equity realized, it's changed the game. We're not seeing huge values. And I had a lot of people ask me during the stay at home, are there going to be great opportunities? I can't wait to get a deal. Somebody even called it COVID discount. They said, "Oh, are we going to get a COVID discount when we go to make an offer?" And my answer, it's still now and was, I don't think that's going to be the case, because people have the option to not sell. Of course, not everybody does, but you can refinance, and you're not necessarily going to be forced to sell and walk away from a 20 or 30% equity in your home. That's a lot of money to walk away from, where we didn't have that previously. So we're seeing the opposite. We're not seeing discounted prices. We're actually seeing, out of several of the homes that I listed that were listed prior to COVID, we took them off during the shelter in place and put them back on. Over 50% of those houses have sold, and they sold for within 3% of their asking price. So that's very telling. And it has only been 3 weeks that we have reopened and been able to actively sell in the Oakland County areas, and in Michigan as a whole. So if people are looking for discounts, really the investor should be looking at, if the stock market, for example, hadn't rallied back, people might be looking to shift their portfolio into other avenues. And real estate is, of course, one of the greatest places to put your money if you know how to invest wisely. You'll see people looking to diversify their portfolio, but we have not seen that opportunity that I think some people were hopeful was going to be there. We're certainly not yet.
Emil, can I get you to respond to Renee's point about people having the option to stay in their home? Many people are taking advantage of mortgage rates being at all-time and historic lows. Talk about that. Talk about the partnership also that you have with realtors and what you're seeing.
Yeah, absolutely. So with interest rates being, in the low threes, high twos, depending on the product you pick, that the rates are half of what they were in 2008. So the people's opportunity to refinance now and, cut their, you cut your mortgage payment, it's life changing. It could be the difference between keeping your home or downsizing when one income, if you lose income in the household. But we've seen people, and some of my clients at the beginning of COVID that called me and said, "Hey, I want to defer my mortgage payment." We took that opportunity to look at their mortgage and say, "Well, something, if we time your mortgage right, you just made your payment, we can refinance you, and when you refinance, you skip making a payment, you still pay the interest in your mortgage, it gets rolled into your new mortgage." But we were able to take that and time it properly for people to get 1 or 2 monthly payments, rolled into their mortgage, so they didn't have to do that. They also were able to take advantage of the interest rate. Like I said, going into this forbearance program, we didn't have any idea of what the agencies were going to put out as guidance of how long the waiting period post forbearance was going to be before you could refinance again. So we did our best to advise all of our members to, hey, take advantage of the low rates. Let's see if we can restructure your mortgage, get you that payment relief for a couple of months by refinancing. And it really helped out because it, really solved 2 problems at once. And back to Renee's point about, 2008, people didn't have equity. There were a lot of high-risk programs. I don't know if anybody remembers the option arm, where you pick a payment and you could even defer your interest until your loan accrued up to 125% of the original balance. I mean, those products don't exist anymore. Even something as simple as an interest-only mortgage, which, those products are only reserved for high net worth individuals today that have, reserves to come up with, if they have to sell. And, so those types of products are out of the market now. Everything's much more, the responsibility of lenders putting people in products. We have safe harbor practices where we have to make sure, we can't put fixed income people into ARM products that'll adjust on them. We have, really strict lending guidelines, and we really like to think of it as, we look at it from the stability standpoint. We want, you never want to put somebody in a product that doesn't fit their financial picture. And we look at all options for every borrower, even borrowers that say, "Hey, we'd like to do this." We say, "Okay, have you considered this option?" And we work with every borrower to meet their financial needs, both not just from an equity objective, from payment goals as well.
Randy, I have a question from Andy Wakeland. He's added it to the chat box. He's curious to see how COVID is affecting future developments in buildable lots. Are builders still looking for additional sites, or just building out the inventory that you've currently focused on?
So that's a great question. We have a development in West Bloomfield, at 14 Mile and Middle Belt, that we're starting site development on right before COVID hit. And, we bought the land, we have it entitled, and we have a practice in our business that we don't allow any debt on any land. So we own that land free and clear, and the 2-month delay did not particularly hurt this deal. But it is interesting that the product is a ranch first floor master empty nester product, and we feel like that buyer is somewhat insulated from what's happening in the COVID world. Nobody's totally insulated, but less likely to be relying on a job if you're an empty nester. So that product, we're moving forward with full speed ahead. As soon as we open back up, we started site development. New projects are probably on hold. I think, at least from my standpoint, we do want to see how the post-COVID world shakes out. Where are land values? What happens to construction costs? It's been well documented in Southeast Michigan the past couple of years. Construction costs have gone up considerably. Once this backlog of being shut down for 60 days, once that's caught up by the end of this year, what happens in 2021 to construction costs? If construction costs go down and interest rates stay this low, does that impact land values? So there are some unknowns based on the pre-COVID world. But anything we already own in our pipeline, we own the land free and clear. We're moving full speed ahead, and we're still bullish on the housing market in Southeast Michigan for all the reasons that all of the panelists have addressed today.
The Small Business Association of Michigan recently did a study. 1 in 7 small businesses will not recover. Some think that number may be higher, certainly on the hospitality side of things. I'll start with Andy. What are your thoughts on how people will recover, and how will that affect the future of collecting tax rolls here in Oakland County?
Yeah, well, I think we've got to get more aggressive about how we support those businesses that are trying to get through. And part of that, I think, means building out our entrepreneurial ecosystem, where those businesses are able to have access, resources, perhaps to, free workspace, ability to learn from other kind of peer mentors, and also to have ready and immediate access to grants and loans. Those are a few of the things that we're going to need to do to help increase those numbers. Of course, small business in and of itself is risky business, and we know that a lot of them generally don't succeed, but we want to give them a level playing field. And I think that that's going to really require county government, state and federal, stepping in and really leaning in more to assist these businesses and to make the environment more conducive to their success.
Renee, same question. How does the impact of COVID-19 have on small business affect the residential real estate buying and selling market?
Everything affects real estate. This is the largest investment people will make in their lifetime, whether it's at 100,000 or 1,000,000 or whatever it is. This is significant money. And what we look at least in my industry, I sell a lot of the higher end. Of course, we are across the board selling different price points. And so some of the smaller business people who may have used their life savings or an equity line on their home or whatever it is to open up that business, and if they're not seeing a return or they are forced to close their doors because they can't get the recovery time they need, then you're going to see some of that back to hopefully what won't be foreclosure, but certainly a shift, and some of those sale prices might change. But I look at the lower end and how that up affects the luxury market. If you're selling a $200,000 home, you're likely to purchase a $500,000 home. And then if you're a $500,000 buyer, most people are going, changing their lifestyles and increasing their purchase. So if we see a slowdown in the lower end, that ripple effects up to the higher end. And so we pay attention across the board to this in the small business ownership. Anytime you have any type of economic insecurity and issues like this, it's going to affect the home ownership, and people may be being forced to rent or sell their homes when they didn't want to because they can't afford now to pay a mortgage and pay maybe an equity line, and that's their way out. But what we have to remember is that the housing industry the federal government isn't just putting money into the stimulus package because they want everyone to own a home. That's a wonderful, American dream ideal, and it's wonderful to believe, and hopefully everyone can. But the reality is, home ownership brings a ripple effect into the economy of what people then spend. You have landscaping, you have improvements, you frequent Home Depot or Lowe's or whatever store you like to go to do these things. But there is a lot of money that stimulates the economy and stimulates employment as a result of home ownership. So it will not just, every industry has to some degree is affected by the real estate industry, and vice versa. So when people are doing well in their businesses, they then will spend maybe money to do that home improvement or extra gardening or whatever it is. So it's really essential that the small business industry remains stabilized, which in Southeast Michigan, let's face it, that's a large majority of the businesses here are small business, maybe more so in our area than other areas around the country. And so to really pay close attention to that certainly will be something that foreshadows what we're going to look at in the real estate sales, because that's, again, people have oftentimes they'll take the home equity line to underline, to maybe get that business started, and that affects their ability to keep that home or to improve on that home or whatever the case may be. So it certainly affects us on all levels.
Emil, let me ask, with everyone, those that are being furloughed or on unemployment benefits, how do they obtain a loan to either refinance or to buy a new house in the midst of a pandemic?
So with unemployment, you just can't qualify for a mortgage with unemployment. If one person in a family is receiving unemployment and we can qualify on the other spouse's income alone, we can proceed. But the guidelines basically said that as soon as you're back to work and get a pay stub, we can close on your mortgage, whether it's a refinance or a purchase. That's for unemployment and furloughed workers. With self-employed borrowers, we've really been, one of the biggest challenges is small businesses. They don't have the staff to keep records always. So one of the changes that's come out recently is we're requiring, or Fannie Mae, Freddie Mac are requiring profit and loss statements and balance sheets, which sounds like something every business should have. But these small business operators, sometimes they don't have that, and they take their records at the end of the year to their CPA. And we've created a worksheet, and we've created a questionnaire for small business owners to help us determine, how we can get them, how we can continue to fund their mortgages. But it's been, it's definitely been an effect. We've had a lot of people whose businesses have just basically been put on hold for the last couple months. And, now that they're starting to open back up, there were some businesses that were affected and some businesses that weren't. But, the record keeping for small businesses is going to be very important moving forward with qualifying for mortgages, because, like I said, Fannie Mae and Freddie Mac are demanding now that we collect profit and loss statements, not just tax returns and pay stubs.
And I've got time for just about a question for each of you. I'll start with Randy. Randy, give us what is your best piece of advice you have for a smaller developer, somebody that's building one or two homes at a time, certainly not somebody that's building out subdivisions. But what advice would you give them right now?
This is very cliche, but if you're building one or two houses at a time, the location is the key. In real estate, the location, even in a downturn, if you have an A location, you're going to sell your home. If you have a B location, you're going to have a harder time selling that home in a downturn. But no matter what you're doing in real estate, if you focus on the location and you pick an A+ location, you will be great in the long run.
Andy, real quick, what advice do you have for your constituents that are either furloughed or collecting unemployment benefits right now?
Well, the biggest one is to reach out for help, for them to know that they're not in it alone, and that if they reach out to me at 248-421-ANDY, we can help them to navigate that unemployment insurance system. We can help them to work with their mortgage lender. So the biggest bit of advice is loan, that there's resources there to help you. And we want to make sure that you take advantage of those resources available through the county treasurer's office.
Emil, advice you have for others looking to refi or obtain a loan right now?
Get in touch with a mortgage lender. And like I said, it's a very competitive landscape in Michigan. Get in touch with a mortgage lender, review all of your options. make sure you're looking at all products. Right now, a lot of my clients have been taking advantage of 15-year mortgages just because the rates are so aggressive. They're, rethinking the way they want to have equity available if they want to move in the next 3 to 5 years. So people that have bought with lower down payments are shifting to 15-year mortgages. Some people are taking advantage of the longer term rates. Get your credit, make sure, check your credit reports, make sure you don't have some little collection for $84 that's taking your credit score by 30 points, because mortgage rates are tied to credit scores. And just get your financial house in order, get your paperwork in order, contact your mortgage lender, and review all of your options before you move forward.
And of course, we had to save the best for last. Renee, Lossia, Acho, give us some final words of advice.
I think the most important thing, to echo really what everybody here has said, it's understanding that there are options. And the beauty of what we're going through right now is that there are options. There's options to either refinance your current home, to sell, to renovate, and there are no two circumstances that are alike. But the beauty of what we are going through, if there really is any, is that there are wonderful options that should be available. There are opportunities, there are packages, there's stimulus, there are certainly a lot of things out there to help you navigate the process. So the most important advice I give anybody, and I give it to my clients all the time, have a consultant with you, not just a real estate agent. Look at this as really what you have available to you, and have somebody who can really help you to understand what all of your options are, so that you can make an educated choice moving forward, because there are no real answers. It's really what's best for you at the time.
Well, we want to thank our esteemed panel. Again, we want to wish Renee happy birthday. Renee, Lossia, Acho, Emil, Izrailov, Oakland County Treasurer Andy Meisner, and Randy Wertheimer. I wish you all continued health and safety for you and your families. Appreciate your insights and leadership during the pandemic. Thank you so very much. And for those of you at home, again, we're sensitive to all the lives that we've lost during COVID-19. If you've been impacted, our thoughts and prayers are with you and your family. We're asking if you please consider, if you found the program of value, to please consider making a monetary contribution to the Children's Foundation COVID-19 Emergency Relief Fund by texting 2020 IMPACT to 76278. Help us make a difference while making an impact. Again, we appreciate our title sponsor, Signal Restoration Services, for sponsoring Impact on Residential Real Estate, and all of our sponsors. And if you found this, if you enjoyed this program, we'd like to ask you to invite a friend or colleague to join us for next week as we focus on the impact on the cannabis industry here in the state of Michigan. You can catch this program and all of the other impact programs on our YouTube channel. Please subscribe today. And we want to remind you to stay healthy, stay safe, and we'll see you soon on Impact.